Watch this video to understand the big implications with this week's economic reports on real estate. This is going to impact not just the real estate investors, but anybody who is watching the real estate market. My name is Kiran Vedantam and we help with commercial and residential mortgages in multiple states. Recent inflation data marked by a spike to 3.5% indicates that the period of falling inflation rates might be over. This, coupled with the consumer price index and a significant up in the 10-year treasury yield, the highest since last November, we are seeing signals that may really concern the prospective home buyers. What do home buyers need to know? Number one, mortgage rates are on the move. They are going up. Although the average mortgage rate has been relatively stable, it's right around 6.88%. The recent economic shift suggests that this is changing. The rates have begun to climb and they are going to see more climb in the next few weeks, likely influenced by the recent inflation and treasury yield increases. Over the next few weeks, we can actually anticipate further increases which would cool off the traditionally busy spring buying season. The second thing, there is a huge impact on overall affordability. Higher mortgage rates mean higher monthly payments on new home loans, which could deter the first-time home buyers who are often more sensitive to all these borrowing costs. If you are considering buying a home, then these changes could impact your decisions on when to enter the market. Step number 3, huge advantage for people who already have equity because home prices are still not falling with the rising interest rates. So for those who've seen these home values increase over time, this might be a terrific opportunity to get the home equity line of credit and then have that ready in case there is other opportunities coming up in the commercial market. Of course, the cash buyers are in a strong position. Interestingly, last month recorded the highest proportion of cash buyers in a decade, with 1/3 of the buyers totally bypassing the financing altogether. They are paying cash. If you have the cash and the means to buy with cash, these changing interest rates will have literally no impact on your purchasing choice and you will be in a strong position. What are some strategic insights for real estate investors? First is watch the commercial sector, and the people who own commercial properties are in for a huge sticker shock with their monthly payment. The trends impacting residential mortgage rates are also influencing the commercial real estate. Higher borrowing costs could lead to reduced demand and potentially lower prices in some areas. This might be a huge opportunity for people who are evaluating investment strategies, especially if you are involved in commercial properties. Another aspect is a long-term planning. With borrowing costs likely to rise, locking in interest rates sooner than later could be a wise choice, especially if refinancing might not be an option. This could save significant amount of money over the life of your loan. In summary, know that the recent economic data suggests a shift in the housing market landscape, primarily driven by the higher inflation and higher mortgage rates. So for homeowners, especially those looking to buy or invest soon, staying informed and strategically planning your next move is extremely critical. This is going to save a lot of money, or you could stand to lose a lot of money. Keep a close eye on these trends as they develop and consider how they might affect your real estate decision. If you have any questions, be sure to subscribe to the channel and also feel free to reach out to us and we'll be happy to provide the best service possible.